Hello everyone and welcome to the ASX Stock Pick series of Mango Monkey Learns Money. My screen name is Mango Monkey and every day I upload a brand new video on saving money, making money and investing money to show you how easy it is to become a millionaire. Even Kevin O'Leary tells me I can become a millionaire by saving and investing $100 each week. One of the ways to invest is by investing into a portfolio or into an index ETF. And another way to invest is to choose your own companies if you believe you can perform better than the market average. So in today's video, I will take a quick look at a finance company who provides business loans to Australian small and medium businesses. They do this really well and a lot of businesses use them, because they can transfer the money to the borrower within 24 hours. Also, they do not need the business tax returns and financial statements. The name of this finance company is Prospa, and Prospa only needs the business bank account statements. So for businesses who are very slow at doing their tax returns, or maybe the business claims too much deduction for tax purposes on borderline business expenditure, like how Donald J. Trump claimed $70,000 worth of haircut expenses in his tax return, Prospa is the go-to lender. I'm curious, how much does Prospa really make and how much is their interest margin? So I'm going to look at their annual report, which came out about a month ago. So during FY20, Prospa earned $131 million in interest income against an average loan book size of $389 million, which I obtained by averaging the loan receivables at the start of the year and at the end of the financial year. This means they earned around 34 cents for every dollar which they lent out. This is a pretty decent interest income, it's a pretty decent rate of return. And their funding cost in FY20 was around $20 million, which is around 5% of the size of their loan book. In other words, Prospa paid around 5% to their lenders, not counting any dividends to their shareholders. It turns out that Prospa suffered losses in both of the 2020 financial year and the 2019 financial year. In FY20, they lost around $26 million, and this is roughly 20% of their interest income or 7% of their average loan book. This is a loss of around 15 cents per share, and currently their share price is around 70 cents. So now I want to know what sort of expenses they paid during the year. I mean, a lender lends money out, so they really should be making money. Okay, so if I break down their expenses in FY20, I found out that their biggest expenses were loan impairment expenses, followed by general and administrative expenses, and then sales and marketing expenses. I'm also interested in the value of loans written off because impairment expense is an accounting expense based on management's estimate of what they will lose. On the other hand, a loan is only written off if the borrower has actually fallen behind. Prospa has tried to contact the borrower and they believe it is unlikely for the loan to be paid back. So on the screen, I'm also showing you guys the value of loans written off as a percentage of interest income and as a percentage of the loan book. Surprisingly, it's actually not too bad. I mean, in FY20, their interest income is around 35% of their loan book and their funding cost is around 5%. The loan written off is around 10%. So that still leaves them with around 20% margin to play with. I'm curious to know if their general and administrative expenses are more of a fixed cost or a variable cost. In other words, does it go up proportionally as they lend out more money? If you have any ideas, please do drop a comment down below. I do think that there are significant improvements they can make to lower down their general and admin expenses. At the moment, I believe they assess each finance application manually. A lot of applications are most likely getting declined because a lot of the times the businesses who need money that go to Prospa are the businesses who cannot get a loan from the bank. And also they most likely cannot even get a loan from Prospa. So there is a lot of time and energy wasted to assess the hopeless loan applications. There is scope to automate some of the processes. They may lose some customers and they may mistakenly knock back some customers, but I think it's worth doing. It's definitely worth doing if their credit assessment and admin expenses make up for their biggest second expense category after impairment expenses. So it's worthwhile looking into this further. And if they are able to automate the credit assessment process, I feel that they can significantly improve their profitability. It is encouraging that Prospa's interest income has remained about the same as a percentage of the loan book balance in FY20 and FY19. This suggests to me that they haven't had to reduce their interest rate too much in the face of more competition and the smart box disclosure, which they started to make in January last year. I'm also pleased to see that they have been able to control their loan write-offs and impairment expenses in the midst of the health pandemic. With their share price being around 70 cents, at the moment their price to book ratio is around 0.9. In FY20, they lost around $26 million and thus around 20% of their book value. Underlying interest margin is strong, and you can see their general and admin expenses have dropped a little bit from FY19 to FY20. If they can continue to realize further efficiency gains and cost reduction strategies, and if they can keep their credit losses under control, it is quite possible for Prospa to start turning into profitability very soon. What gives me some comfort is the fact that more than half of their customers have resumed repayments on their loans since May 2020. At the moment, they have around 8% of their Australian customers on full deferral and around another 8% on partial deferral. I'm personally not too worried about the partial deferrals, but the full deferral is a big question mark at the moment because we do not know whether these customers will eventually start paying again. Please also note that Prospa employs leverage. At the end of FY20, their net asset is only around $129 million. However, their loan book was around $374 million, and that is 2.9 times. So what this means is that even a 10% loan write-off can reduce their equity by around 29%. As an equity holder, you are exposed to this risk, and you will be the last person to get paid. Will I buy Prospa? I do have Prospa at the moment, and I bought it around a month ago at 70 cents. At that time, I've only started my YouTube channel, and I honestly didn't do too much analysis before buying. I pretty much looked at the chart, it went down heaps, so I thought, okay, let's take a gamble. I invested less than 5% of my net worth into Prospa, so I didn't spend too much time researching. If I was asked whether I would buy it now, I still think I might. There's an upside if the credit losses can be kept under control, and if Prospa can continue to drive down their general and admin expenses, perhaps with more automation of their credit assessment processes. But I think I want to look into some other companies first, and I want to compare them to Prospa, because I really do not know how the different loans will play out over the next year. I also do not like buying into companies which are making losses, and for the past 2 years, Prospa has not been profitable even if I ignore the extra loan impairment expenses due to the pandemic. They were only modestly profitable in 2018 and 2017. The profit wasn't that great, and I would have thought it would have been significantly more given how expensive their business loans are. So yeah, I will hold off for a bit and look at other companies for the time being. But if I cannot find anything better after looking for a couple of weeks, I will probably still buy a small position in Prospa because it does have some potential. Let me know your thoughts on this company. And if you want to help me grow my YouTube channel, please consider gently tapping the like button and subscribing to my channel as well. Take care and have a lovely day.